Welcome back. You're watching Business Morning on Channels Television. So as I said just before we went on that quick break, we'll be talking about commodities next on the program. And Amaka Ajebu, who is an economic research analyst with financial derivatives company, joins me now. Amaka, a good morning to you. And thank you for joining me on the program. So this week, you and I are having conversations. Let's start off with taking a look at inflation numbers. That came out on Friday.
Yes.
And financial derivatives company predicted a very marginal, in fact, a dropping down in inflation numbers. But we see that going up. Talk to us about this.
Okay, so first of all, inflation is the persistent increase in the price level. So our prediction of 18.3% wasn't saying that, we expect prices to decline. We just expected prices to increase at a slower pace. And this isn't entirely an outwardly conclusion, given the trend analysis we did in 2016, because we saw a decline in the percentage difference in headline rates between the months in 2016. So, so we came to this conclusion. And also, if you look at a decomposition of the inflation rate, you'll see that core inflation, which is the measurement of long-run price trends, factoring out, things like anomalies and seasonalities, actually declined by 0.1%. So this conclusion is not entirely deviating from what we see in reality. And we expect that in Q1, not enough for me not to box myself in, but we expect in Q1 that we will see our predictions coming to light.
But what kind of signal does this send to everyone in terms of what lies ahead for the economy?
Yes, it sends a good message in the sense that you could, like I said, core inflation has gone down by 0.1%. So we can expect the increase in the price level to start to decline as we move on in 2017. And also, if you look at the base year effects, we started off 2015 at a low base year effect. At a low base year of 9.6%. And then, given the economic challenges we saw, we started to see dramatic increases in the price level. So now that we've started with a high base, we can expect this trajectory to start to decline as we enter 2017.
And most of the analysis reports, especially this one from FBN Quest, actually sees that we're approaching a slowdown in inflation.
Yes.
But also from the data that has come out from FDC for today now, landed cost of premium motor spirits, which was one of the reasons why we saw that increase anyway. Transport was one of the main factors.
Yes.
PMS is at 165 naira per litre. One would wonder how marketers are coping under the current business environment. If pump price is between 143 naira and 145 naira, are we likely to see a rise in pump price soon?
Yes, so what we can see now is a reinstatement of fuel subsidy, but an implicit reinstatement of the fuel subsidy, because if you look at the trends, oil prices are increasing, and this will mean higher cost of importation on the part of the oil importers. So it's either there's a price reform of the ceiling of 145, or the government continues to subsidize fuel in the economy. So, and obviously, given our current economic situation, fuel subsidy is not sustainable in the long run. So the government will have to decide what is more important for them.
What will be important now is for Nigerians to know what actually will be going on with regards kerosene price, for instance.
Yes.
The price of, sorry, I beg your pardon, not kerosene, gas. The price of a gas cylinder has increased more than about over 50%, from 3,200 is selling at, in some states, 5,000. In some others, you can get it for as high as 7,000 naira.
Yes.
So the next option would be getting your charcoal burner out, and that's of course going to be affecting the environment.
Yes, so yes, we still are seeing the economic challenges that we experienced in 2016 manifest in 2017, but given the policies that have been set up, or policies that are going to be set up in 2017, Nigerians can sort of take solace in the fact that their government is likely to show up for them. Obviously, these changes don't happen overnight, so we're still going to experience a little bit of difficulty, but as we maneuver our way through 2017, we should expect changes.
All right. So, well, that's basically your outlook for the economy. But of course, we're going to have conversation on Thursday.
Yes.
And we'll talk about more of the developing stories, which, well, will stay in the news, I'm guessing, for a very long time. Thank you so much, Amaka, for coming on the program.
Thank you for having me.
This morning, Amaka Ajegbu is an economic research analyst with Financial Derivatives Company. So we're still talking about commodities, but let's turn our attention to the energy side of things. And starting, of course, this conversation, we'll be taking a look at how some of the oil and gas stocks we track here on the program shaped up on the first trading day of the week at the Nigerian Stock Exchange. So for yesterday of the 7 that we track, there was movement only on Forte Oil, Mobil, Owando, and Total. Let's quickly take a look at that list. Corn oil was unchanged at 37 naira 35 kobo, but we had a volume of 16,671. Forte Oil dropped 57 basis points from its share price to come in at 73 naira 58 kobo. Mobil, however, we've been seeing investors taking very tepid movement around this particular equity, but that notched up 2 naira 9 kobo and finished at 2.09%, I beg your pardon, and finished at 255 naira 9 kobo. Owando up 0.42%, and Total, however, dropped 4.87%. We're still waiting for, the visit of the Vice President and the delegation to the Niger Delta to somehow crystallize, maybe, and boost oil and gas stocks. But if you take a look at those numbers and take a look at what our second page will likely be saying, is that the daily index return is down 0.5%. Year to date is at also minus 5.3%, and dividend yield is at 2%. So Nigeria's oil output is expected to average 1.8 million barrels per day in 2017, according to a recent report from analysts at EcoBank Research. And it's about a 7-page breakdown of what's likely going to be happening in 2017 from folks at EcoBank Research. And Channels Business News editor Bosun Omofaye joins me now on the program to put some flesh on this particular conversation. Bosun.
Good morning.
It's great. Why are you smiling?
Well, I think there's a bit of reasons to smile anyway. Just put a smile on it. Yeah, someone just told me that in the newsroom before I came in here. So
you want to put a smile on it?
Yes,
okay, because for you, 1.8 million barrels per day, it's still not even up to what is being projected in the 2017 budget.
2.2 million barrels. So we're still short by 400,000 barrels.
Is that the reason why you're smiling? And then, for instance, what makes us